Afternoon, everyone. Welcome back to another end of week remarks video. And let's start with the PnL. So we are break even this week. Now, looking at all of the trade, you might wonder how am I even break even this week? So let's look at the trades that made it possible to be break even this week. Starting off with gold. So with gold, we had a simple trigger. We said that, or I said that once the market breaks out that high, it would be a testament to the support holding and we would have a bullish market structure upon the weekly open. So local high, high attempt, high low locally again, and then we get a proper break in market structure. So I bought a pullback and that actually ended up in our favor. I was personally expecting gold to close as an inside week, which means I was expecting the market to basically fail somewhere in there and just consolidate afterwards or maybe even drop off. It didn't. It actually hit the last week's high. So it did go to the full TP, but we closed it there again for just as precautionary measures. So it was a very good trade, right? 2.8 hour trade. You can see it is one of our biggest winners this week, earning us about 1,373 USD, which is nice. Nice to see. Move on to the next winner, which is oil. So you can see that we've only won on commodities this week. So yeah, good week for commodities, at least from my side. So by the way, early closure this week. So I am making an end of week remarks video Friday. I could have made it yesterday, but Friday because it is Good Friday today and markets are closed. You can see that the trading has been halted at around 2 a.m. IST. So let's quickly go over this trade. Very simple. I said it was one of the most beautiful setups. One of the reasons for that was we not only do we have local higher highs and higher lows, we get a nice clean break of market structure, clean establishment above that fib level. And I said that this concept of the price holding above a SR level, not touching it for quite some time, actually means that the prices have been accepted above that level. And that acceptance is a indicator that the market would probably move higher after a pullback. So I actually moved my entry to the upside. My earlier entry was somewhere down there and stops were down there, but I moved them up once that happened. So I said that, okay, if that look is taken, I would enter, which we did. Now, funny thing is, it actually took us into 99% drawdown, and I'm not kidding. If you look at the SL on oil, right, it was around 80.45. And okay, so the prices here are a bit different. So if you look at oil, okay, 80.45 was our SL. The market went up to 80.52. So we got saved by 0.07, which is a very, very thin margin. Very, very thin margin. But in the end, it worked. Okay. Again, you can see that the market has not hit the last week's high here. That's okay. Because look at that. On my broker, it has hit the last week's high. And we closed a bit early. Again, precautionary measure. So done with the winners. Let's start with the losers. So losers, yeah. Getting lucky. Talk about getting lucky and then messing it all up. Let's go with S&P. So if you remember, my earlier S&P bid was there. Okay. My earlier S&P bid was there. And the stops were probably in there. Then later on we moved our bets because we know that these are metals. These are indices, especially US indices. They don't really behave, right? They'll tell you one thing and they'll do the other. They always fall in line with the trend. But when it comes to locally, they'll chop you off. They'll stop you out, Well, by chop you off, I mean chop you off in a range. Okay, not literally chop you off. So I moved my entry from there to there. Actually, what I should have done is moved it to there. But that's okay. We barely made it, right? And this is late in the night. Okay, not late in the night. It's probably like 4 a.m. or something. Let me check. So this is, that's 1 a.m. Okay, that's 1 a.m. in the night. I am not awake at that point in time. Got filled, got lucky. Next, he moved quite nicely. Hits resistance, starts to fall off. So what I actually messed up, where I actually messed up was I actually ended up closing my trade there. at break even. One of the reasons for that was Nasdaq. So if you look at Nasdaq, right, Nasdaq actually stopped us out. So this is our second loser, okay, or this is our first loser basically. So Nasdaq stopped us out, and that is where I closed S&P. Okay, turns out I should not have. So once I closed S&P there, it dropped down a bit, and then it went towards the target. So again, that goes back to my point that I am a very, very poor manager. When it comes to managing trades, I am the worst out there, probably, right? Or one of the worst out there. So yes, it is what it is. The trade that we stopped ourselves out on, actually hit target. So 1.2k USD gone down the drain just by managing the trade. Okay. So count as my first loser. Anyways, if I was, dealing it as I always do, I would have placed my entry there. Okay, maybe in there, and stop would have been there. So I would have been taken out anyway. So again, that's some copium from my side. But anyways, uh, bottom line is we messed up the trade by managing it. Moving on to Nasdaq, nothing to see. We have a clean trigger, weekly open, makes a lower low, fine. Then we have a higher low, higher high. Okay, absolutely no issues there. So I bid this low being taken, which it did. Then the market moved up, hit resistance, right? Hit that under over area, acted like it wanted to go down, actually ends up reversing, and then I would have closed out at break even if not for that stoppage. But we got stopped out. So there's the first loss. The second break-even trade was S&P, which should have actually been a profit if not for the stupid management from my side. Let's move on to the place where we actually lost quite some money, which is silver. So if you remember the silver trade, the silver long trade, it was, I think I had entered, I don't even remember my entry point. I think my entry, let's have a look. Okay, let's be accurate. So there's gold, and next to that is silver. So let me show you the trade history. Okay, it's there. So we entered there. Okay, and you can see that the trade was stopped out there. As soon as it got stopped out, consolidated for a bit, made a new lower low, and then proceeded to make a higher high. Didn't hit target, so again, pointless post analysis. We just look at the trade, okay? Because gold, if you look at gold, the gold long actually worked out, but the silver long failed. It is quite common with metals that one works out and the other one fails. So I think my entry was somewhere to the weekly open, and stop was there, okay? And we had that gap fill as our target, somewhere in there, and that was the setup. So if you hide, no, don't need to hide anything. Yes. So low sweep, high broken, right? Low sweep, high broken. Again, big mistake, right? What I should have waited for is weekly open and a new higher high. So I should have waited for the market to close above this high. If I would have waited for that, I would have had better triggers. And once I had better triggers, I should have gone for the trade. I did not, because I decided to go with my strategy and it didn't work out. Okay. You can say that the strategy was wrong. You can say I did not execute it properly. End of the bottom line is that trade failed. Okay. So there's a stop out. The market goes for another low, and then it just moves away from the bottom. So one thing that did not change, or one fact that did not change, was the market was indeed into support and has bounced. Okay. It just didn't want to play out in the way I wanted it to, and that's fine. So that's our second loss. So we're done with 2 to 3 losses. Let's go over this. It flashes like crazy. So we're done with silver, gold. I'll come back to Ethereum. We're done with US indices. We're done with oil. So EG and Ethereum are the only ones that remain that I want to go over. Okay. EG. Let's go over EG. Again, no excuses on EG, it just didn't work out. Okay, because I'll show you how clean the triggers were on EG. Have a look at this. So there we have the low taken. Okay, kilo. Why kilo? Because this is a low that created the higher high. Okay, that is why kilo. High broken. Okay, and we have a local structure break as well. So high broken there as well. And then we have this high being broken as well. So you can see the market did close above that high. So again, clean triggers. Okay, and also manages to get back above the last month's high. So I thought any pullback into the weekly open or the last month's high would be a long, with that holding as our stop and target the last week's high. It didn't work out. Okay, the market completely collapsed and it didn't even close as an inside week. So you can see that the market's probably going to hit the last week's low. Okay, so again, completely wrong on EG, and it does sort of make sense structurally. What we were trying to do is we were trying to trade a range breakout. That ended up being a deviation, and the market is, wow, what a line. And the market is probably heading towards a range low. So again, range play active on EG. I don't know how long this range is going to continue, but we got stopped out. And yes, we ended up being the bait for the deviation. Apart from that, no reasons why, no excuses on EG as well. Well, technically, you cannot have excuses on any stop out trades. It just didn't work out. It's the market. Yeah, EG done. Ethereum, right? Well, Ethereum's a proprietary strategy, okay? So the Ethereum, it was a short. So you can see that Ethereum sell 9.2 Ethereum. It was a proprietary strategy. Stopped out, we had to pay swaps on that. By the way, the swaps we have paid this week is 150 USD and commissions is 19. That is, I don't know. No comments. So yeah, proprietary strategy on Ethereum. We sold and market went up. Cannot discuss on that. It is a bit of a secret. So that's it for the trades review. Done. And we are also done with March, by the way. So we're done with the trades review. So this week we closed out positive. And if you add in the sweeps, we closed out slightly negative. So I would say we were break even this week. Okay. Last week we were up 2.5K. This week we are break even. Previous to that week we were minus 1.2K. So this is the start of the YouTube channel. This is my second week. This is my third week. And let's quickly take a look at some trades. Now, I know it's going to get long, but that's okay. So one issue in my trading, which I have recently encountered, well, recently I discovered that issue. It has been quite a prolonged issue with my trading or trading psychology, that I tend to get very biased on few things or on few assumptions, and I take those assumptions as fact. So last week, if you look at currencies, okay, currencies had very drastic last week. Okay, so let's have a look at the euro, because euro was the one that's the most drastic and convinced us to not trade currencies. So if you look at euro, right, okay, so if you look at euro, it was uptrending, then started downtrending. So we look for shorts, and then it broke the market structure, right? High lows. Then we were like, okay, probably that uptrend is going to continue. Doesn't happen. Market makes a low. Okay. And that is when I pretty much convinced myself that I don't know what's going on in currencies. Okay. And let's not trade currencies this week. Now, not trading is always a good decision, but in this case, it was quite detrimental to our PnL. Okay. I will go over some trades which were pretty bread and butter setups that we sheerly missed out on due to just being biased, or that were missed out on due to sheerly being biased. Okay, let's have a look. We start off with, no, not euro, we don't care about the euro. Start off with AUD USD. Brilliant trade. So if you remember correctly, right, the trend of the market was down. This is where it tried to switch, but then again we have a nice clean downtrend because we have a lower low, high, low, okay, downtrend continuation probably from that side. let's have a look at what happened this week. So week opens, right? We have a higher high, higher low, higher high, higher low, higher high, so on and so forth. Now we know that it's a downtrending market. So unless the market breaks above that high, okay, or unless the market makes another higher high, I wouldn't really assume that it's an uptrending market, because you cannot just go by the fact that, oh, look at that, high high from there, high high. No, you have to look at it as a whole. Okay, so you have to look at what the market's been doing for the past several weeks. It was a downtrending market. So there's a final high high. Then we have a lower low, low high, lower low. Boom, we've got a trend for the week. Now bounce off the weekly open. Again, what we said, or what we always say, is that in a downtrend you look for high sweep, low broken. Okay, you do not look for low sweep, high broken, or you do not look for, low sweep and high broken. Okay, so could have shorted that candle there, or could have shorted these wicks in there. Okay, target last week's low. Simple trade. Okay, you can see nothing too complicated in there. Just short into that breakdown candle, or you can short into that high. Anything goes. Stop at that high, assumed high of the week, and 1.7 hour trade, 700 USD. Gone down the range just by being biased that, oh, we won't trade currencies because we don't know what's going on. Where you don't need to know what's going on. You just need to follow the triggers. Look at NZD. I think NZD is a better example. So why? Have a look. Open of the week immediately breaks below the last week's low. Now one can say that this is a blip and the market's probably now grabbed liquidity from down there. It's going to go up. But it does so. Makes a higher. As soon as it makes a higher high, break of market structure, break of market structure, break of market structure, bam, completely sells off. Again, in this case, we are not looking to buy support because it's a downtrend. So we are looking for high sweeps and low broken. Okay. So have a look. There's a high taken. So you could simply just short into this wicks or short above that high. Target, stop loss up there into the bodies of those candles. We know that there's already been a break below the last week's low. So we can target the last week's 1.2x extension. That's a 2.7 hour trade. Mental. That you could miss out on such a trade due to sheer bias. Again, this is an issue I've recently encountered. Maybe I was overlooking on this issue, but this is something I need to fix. I need to stop getting biased. When I say bias, I'm not talking about the trend here. I'm talking about whether a particular asset, okay, is going to do this or this. Okay, sometimes you just assume that the market is going to do that, and the triggers always say the opposite, right? Open of the week triggers always say the opposite, but you're still fixated on that bias that you want to do this with that asset. Whether it be just going long after the open or anything. And that cost us this week quite a lot. So you can see 2.7 hour here, 1.6 hour on AUD. Maybe I would have not taken the odd trade because, again, don't want to add too much risk. But NZD trade was, again, it presented itself in front of you and you did not take it. Being so blindsided by the fact that I won't trade currencies is just complete bullshit. Okay. The market's in a clean round trend. It's come off of support. We don't give a shit because, again, market's downtrending. High gets swept, low broken twice. Okay. And on top of that, you have this blip below the last week's low. You have everything on this trade and you do not trade it, or you just overlook it. That's not good. That's really not good. One of the other examples is, USD CAD. Again, it didn't play out that well, but you can see how midweek, okay, it reversed. Makes a high, low, high. If you buy that low and you target the last week's high, again, that becomes a good trade. Because since it's the end of the month, no one's asking you to make high highs, but you can indeed target resistance and get away with it. Okay. You could have definitely bought into this low or even below this low, Be as greedy as you can on trades where you think the probability is going to be low. Okay. There's the stop. Always go for the bodies. Don't need to go below there. You can go for the bodies. Target resistance, be done with it, right? Even if you go there, it's a 1.5 hour trade. So huge opportunities missed out just by being completely biased to the fact that, I don't know what's going on in currencies, even though, you had some structural data on this being the range high break and all that stuff. That's it. That's it for the end of week remarks. I would also like to show you one thing. Okay. So we go to custom time period and let's have a look at the assets. Oh, sorry. Let us have a look at the PnL since we started the YouTube channel. So we started the YouTube channel around second week of March, which is this, and up until the end of March, which is 29th. So there it is. So ever since we started the YouTube channel, we are up 1.32k USD. Wow. So yeah, that is the closure for the March. It's going crazy. I don't know why. Okay, that's the report for March. 1.3, nothing impressive. I mean, it's even below average. But let's hope to fix few things in April. And going forward, one thing I would be doing is I would be increasing the risk on my trades. Now, this is not due to some circumstance or anything. This is a change that I want to do in my trading since a long time. So I would be increasing my risk per trade and I would be taking less amounts of trade. Okay. Now the amount or the trades to be taken would be completely decided on the market conditions. How do I feel about the market condition would dictate which kind of trades I take. Okay. And the risk would be increased. So my current max risk is 0.7 approximately. Okay. 0.72 maybe. Right. My lowest risk is 0.45%. Okay. Going forward, my minimum risk per trade would be 0.7%. This is going to be my minimum risk per trade. I might go up to 0.95%. So this is going to be my new risk profile going forward. This is a change that I wanted to do since quite a long time. And I think now is the best time to do it. I think now is the best time to do it because I don't know. I am confident in my analytical abilities and slowly I've been gaining confidence on my execution as well. Okay, just want to avoid few obvious mistakes and I think we should get this account soon. Okay, currently it is in phase 1 challenge and yeah, we should get this account soon. Even if we don't, you'll know it. If I do, you'll know it. And that's it for March. That's it for this week. See you guys in April. See you guys next week. Bye.